Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning to all. Today will be Wednesday, 25th of October. So before we start, let's take a look at the disclaimer slides first. Okay, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, I'll be covering three key takeaways from my daily dose of market insights. Will be key events and highlight that took shape yesterday and their impact on the various asset classes, and as well as what are the key data and event to look out for today that could potentially trigger a significant movement in the asset classes that I will actually highlight to you all, and as well as the short-term technical outlook on the broad-based asset classes ranging from benchmark stock indices, FX, and as well as commodities market. All right, so without further ado, let's kickstart off what happened to shape yesterday. So what we could say yesterday is a rather busy, heavy calendar in terms of economic data releases and as well as US earnings releases on several key component stocks. But all in all, what we could see over here is that the US benchmark indices actually rallied yesterday, ranging from a daily gain of 0.6% to almost 1%. So the leading the fort was actually the Nasdaq 100. But what's interesting over here is that the Nasdaq 100, despite the rally itself was not smooth sailing. It actually caused a lot of whipsaw during the intraday session. And I believe that during the mid session, it actually went down. The gains were almost reduced by half before inching up much higher again at the close in anticipation of Microsoft and Google earnings. But all in all, the Nasdaq 100 still remains below a key short-term resistance level, which we highlighted yesterday in my daily market insights. And what's interesting over here is that it retreated right at this key resistance level after a test on it. So later we will actually revisit the short-term technical outlook of the Nasdaq 100. So let me touch on the earnings of the Alphabet and Microsoft and their impact towards the market. All right, so what we could see over here is, let me show my screen now, right now. Okay. Give me a minute. Okay, so all in all, right. Okay, so let's wait for a while. Okay, so what I could see over here is this Apple actually managed to actually surpass earnings expectation, and their share price actually extended their we call it the normal session gain. So in doing the normal session, right, the normal US trading session, Microsoft only gained 0.4%, but due to this we call it a robust or rosy earnings we call it result that surpassed expectation, the share price actually gained close to positive 4% during the after trading hours, because in US stock market, the shares actually allowed to trade after the close of the US session for, I think, for a period of time. Okay, so that's actually drive the futures prices as well. If you could actually take a look at what happened in today's early Asia session. But what's interesting over here is Google actually missed expectation. Okay, Google. So Google, which Alphabet, the share price actually tumbled, erased their daily, yesterday's the normal US session gain. During the normal US session, they actually added plus 1.7%. That means close to 2% gain in the normal US session. But however, during the release of this Apple results, their cloud unit actually missed expectation, where I saw the after hours trading session, Alphabet share plunges by negative 6%, which is a fair bit. So if you look at overall, right, it's pretty much of a negative, not say negative, a rather mixed session. But what's the price indication of Apple and Microsoft, right? Is not very rosy if I were to interpret it accordingly based on technical. Okay, so now we're talking about, since we're talking about Apple and Microsoft right now, right, let me immediately jump into why do I say that from a technical analysis perspective it may not be so rosy for the Nasdaq 100. Okay, let's start with Google first. Okay, so Google, right, if you look at Google, this is the share price of Google or Alphabet. Okay, so now let me one second. Okay, let me hide my face for a while so that you all can focus more on the screen. Okay, so this was Apple price at 138.81 after the close of the normal US session, and this is the 50-day moving average, and this is the major ascending trendline support in place since February 2020, February early this year. Okay, so now if I go to the hourly chart, right, you are able to see the huge plunge in the price of Apple, not Apple, pardon me, of Alphabet, tongue twist, of Alphabet, Google. So it closes the after trading hours at 130.38. Okay, so if I were to go back to the daily session, okay, so let me adjust again. So let me draw this line. Okay, 130.38. Okay, so it's actually plunges below the 50-day MA and as well as this key graphical ascending trendline support. That means what we consider over here is a potential major bearish breakdown of this major uptrend in Google or Alphabet. All right, doesn't look quite good from the Nasdaq 100. Now, Microsoft, because these two component stocks are key component stock of Nasdaq 100. Okay, over here, close at 330.53 during the normal US session. If I were to go to the after hours, okay, it closes at 343.38. 343.38. So if you were to go to the daily again, okay, so let me add in a line, change to a gray color. Maybe I put in black, easier to see. So it's what, 343.38, right? Okay, notice it floated right exactly at this gap up, gap down, gap down turns into a resistance level. Okay, so if price action during the cash market session, when it reopened again at 9:30 p.m. Singapore time later, and we start to react off this level, that means retreated off this level, that means i.e. it actually kind of reinforced this still potential ongoing negative feedback loop that is still inherent in the Nasdaq 100. So this is how I view at things by looking at the individual perspective of Microsoft and Apple. Not Apple, Alphabet. Okay, Alphabet, tongue twist. Okay, then another key economic data released for yesterday was a flash PMI data across the key major economy. So what we will see over here is that the major economy in Eurozone and UK, which is the more prevalent one, is now in stagflationary environment. If you look at the Eurozone over here, okay, manufacturing PMI plunges below the previous month of 43.4, October 43, below expectation of 43.7, services below 48.7, 47.8, below expectation as well, 48.7, very similar to the one in UK as well. All right, so if you look at these numbers, right, in terms of these two global major economy, UK and Eurozone, is now facing a rising odds of what I call stagflationary environment. But however, the one that is still holding the fort, right, due to we can argue due to the fact of Bidenomics, or we call it the reshoring of key industry back into US. The US manufacturing data managed to actually inch back up to kind of a slight expansionary mode back to 50 from 49.8 in September, and above expectation of 49.5. And what we could see over here is the services still remains in an expansionary mode at 50.9, slightly above September level of 50.1 and surpassed expectation of 49.8. So what we could see over here is still rather robust manufacturing and services PMI, due to the fact of the kind of reshoring initiative by Biden administration. But in my opinion, I do not foresee that could actually persist for a long period of time if the rest of the global economy starts to wobble along. But most importantly, in short term, it actually kind of triggered this dollar resurgence strength back into the key European currencies against the sterling and against the against the sterling and against the euro dollar. But what's interesting over here is it didn't actually strengthen that much against the Aussie dollar. Why? Because it's still pretty much mixed bag, the FX market. For the Australia dollar, today the Aussie dollar rallied as expected based on our yesterday's short-term technical outlook. So the inflation numbers in Australia actually surpassed expectation. The lagging one, the Q3 lagging one, it came in at 5.4% year on year, above consensus of 5.3%. But what's most important over here is the much less lagging CPI indicator. They have this monthly CPI indicator for the month of September. It actually ticked up to 5.6% annualized, above 5.4% consensus, and above 5.2% that was recorded in the month of August. So if you look at this trend of this monthly CPI Australia indicator, the resurgence of what I call inflationary pressure has started to tick up again in Aussie land. So that actually kind of reinforce that hawkish vibes that is still lingering around in RBA. That means that actually reduce the odds of having a potential first interest rate cut to be brought forward too soon. So that actually supports the Aussie dollar. And on the other hand, over here is that what we could see yesterday, there was actually a additional physical stimulus measure that's come out of China. So this stimulus measure over here is that the China top leadership actually allow the earlier planned budget deficit ratio against the GDP to be at 3% initially. They actually increase it to 3.8%, and they also allow additional 1 trillion of issuance of sovereign notes for sovereign bond, $1 trillion of bonds, we call it issuance. So all in all, right, this is actually a kind of a additional physical stimulus measure to arrest this ongoing, or negate this ongoing liquidity crunch faced by China property developers, and as well, most important, to negate the current negative sentiment that is seen in the China stock market and in proxy, which is the Hong Kong Hang Seng Index. So based on this positive news, the Hang Seng Index futures yesterday actually rallied by 3% during the European session. So later we take a look at the Hong Kong 33 Index short-term technical outlook. Okay, so these are the key events that take shape yesterday and their impact on the various asset classes. Now, what are the key events or data to look out for today? Will be over here. So we will have a new home sales figure that will be out later in at 10 p.m. And for those who are having a close eye on the Canada dollar, the Bank of Canada will actually announce their latest interest rate policy outcome at 10 p.m. Singapore time as well. Market is actually expecting to stand pat, no change at 5%. Okay, so that is the data to look out for today. And interestingly, over here is that we have Okay, I'm not sure whether this is still ongoing, because usually 4:35 p.m. a.m. the Fed Chair Powell will be speaking. Because I got to do a double check again, whether because next week itself will be the Fed Fund rate meeting. FOMC meeting, usually 1 week before the FOMC meeting, all key Fed officials will have this blackout period. That means they're not allowed to do any public speeches. So I'm not sure whether this one, as indicated by Trending Economics, is it real or not. Okay, at 4:35 a.m. Later, early Thursday morning. Okay, then with that, at 6 a.m. we have this RBA new Governor Bullock speech. So everybody will be keen to hear her view on this latest, we call it a resurgence of inflationary uptake in Australia, as highlighted earlier on the latest inflationary CPI numbers. Okay, then over at the earnings front, US earnings continue to be the limelight of the for the whole entire week. So this today, or I would say that in early after the close of today US session, that means at around 5 a.m. or 4:30 a.m. Singapore time tomorrow, Facebook Meta will release their latest earnings report. So do not forget, over here is that Meta itself, last few weeks they have to see a slew of legal lawsuits. So market will be pretty much interested to hear how this potential legal lawsuit play out, and potentially how it may hit their bottom line. So something very interesting on Meta to look out for. So this also, Meta is also one of the key we call it component stock on the S&P 500 within the top 5 component weightings, and as well as the top 5 component weightings in the Nasdaq 100. Okay, so with that, let's take a look at the technicals right now. So let's jump immediately to the stock indices first. So let us start with the Hong Kong 33 index. Okay, so yesterday, right, the Hong Kong 33 index, we have a rather tight key short-term pivotal resistance, potentially looking way to slide down to 16,800. But however, it dematerialized, it just hovers slightly above 16,000, the low of 16,951 instead. Then after that, due to that positive news flow up for China at the close of the normal Hong Kong trading session, it actually burst up. But what's interestingly over here today, it actually did this bearish reaction right off the 20-day moving average, acting as a resistance. So confluence with this minor swing low now turns into a pullback resistance at 17,600 level. So I'll be using 17,600 level as my key short-term pivotal resistance for today, looking for at least a potential short-term push down to retest yesterday's a level that has been taken out, now turns into a minor resistance level, minor support level at 17,135. Okay, so only a clear break below 17,135, then potentially we could see a further slide to test the support level at 16,800. But however, if we start to see an hourly close above 17,600, then this ongoing counter trend rebound potentially could seek another retest at the 50-day moving average, now acting as a resistance at 17,890. Okay, so that's for the Hong Kong 33. So now moving on, next will be German 30. So no change for the German 30. It actually went up towards this potential counter trend rebound area at 14,885, still hovering below that 14,990 key short-term pivotal uh, resistance level that we highlighted yesterday. The RSI now intending to actually slope downwards as well. So still using that 14,990 as a key short-term pivotal resistance, still maintaining that short-term bearish bias. But for today, I will have a slightly higher support level for us to keep a lookout, watch on for, will be this minor swing high area turns into a broken out, turns back into a support level at 14,830. So only a clear break below 14,830 potentially could increase the odds of a slide to retest 14,630, which was this Monday's low. But however, if we start to see a breakout with an hourly close above 14,990, then this counter trend rebound potentially could extend to retest this next intermediate resistance zone at 15,135/15,195, which is also confluencing the downwards this current downward sloping 20-day moving average, acting as a resistance as well. Okay, now US benchmark indices, Nasdaq 100. So over at the Nasdaq 100, the price actually exactly reacted off with an hourly shooting star, bearish shooting star, right at the 14,825 key short-term pivotal resistance that we highlighted yesterday. Also confluencing with the 20-day moving average, acting as a resistance as well, making this a clear, we call it inflection level in order for the bears to hold. Okay, so all in all, right, we start to see the RSI also starts to slope downwards as well, indicating to us some signs of resurgence of bearish momentum coming back into play, at least in the short term. So with that, right, I'll be still using this 14,616 level as a key downside trigger level. Yesterday, it actually also shaped that bounce. So very indeed, this is a key short-term downside trigger level. A break below 14,616 reinforce a further slide to at least retest Monday low in first step at 14,450. Okay, so that's for the Nasdaq 100. Alternatively, if we start to see an hourly close above 14,825, then this short-term counter trend rebound potentially could extend to retest the 50-day moving average, now acting as a resistance at 15,000 level. Okay, so next for the Nasdaq 100, a bit of whipsaw on the key short-term pivotal resistance level on the Dow Jones Industrial Average, which is the Wall Street 30. So what we could see over here is that the hourly RSI also starts to slope downwards. All right, very similar configuration on the Nasdaq 100. So with that, right, I'll be having a bit of excess, slight above. It didn't have an hourly close, even though it punched out a bit. It didn't have an hourly close below 32,230 level. So for today, I have a slight excess at this level at 33,340. So 32,230 slash 33,340 will be my key short-term pivotal resistance for the Nasdaq. For the US Wall Street 30. So potentially, right, I'll be using yesterday's US session low here as a kind of a trigger point as well. Okay, 32,990, a breakdown below this level potentially could see this Wall Street 30 to shape a further potential slide towards 32,830, followed by 32,570. But however, if we start to see an hourly close above this 33,340 level, potentially this counter trend rebound could actually extend much further towards 33,510 level. So that's for the US Wall Street 30. Okay, so now moving on to the FX market. So if you look at the FX market, it's rather mixed over here that I would like to explain over here. The dollar actually strengthened pretty much significantly against the European currency, sideways against, okay, let me open up the chart for you to see. Yeah, so this is the performance. Okay, so this is the 5-day performance. So you could see is that very clearly yesterday the dollar actually strengthened pretty rapidly against the euro, against the we call it the sterling pound as well. And but however, not so much against the Aussie. The Aussie actually the dollar weakened today, then sideways against the CNH, as well as the dollar yen didn't actually move that much as well. But however, coin to strengthen against the dollar Canada. So now let's take a look at the starting with the sterling and the euro dollar pair first. Okay, so over here, if you look at the euro dollar, so let me start off with the euro dollar. So for the euro dollar, right, yesterday we do have this bullish bias on the euro dollar, but however, the bullish bias has been invalidated given the break of that key short-term pivotal support that we highlighted earlier yesterday at this area around 1.0595. So what we could do over here is that the bearish price reaction reacted off exactly at the 50-day moving average. All right. So for now, right, what we could see over here is that I'll be using formally this breakout level point here, the swing high of 11 October, breakout reacted off the 50-day moving average, and after it did a steep slide. So this is what I call a failure bullish breakout. Given that it's a failure bullish breakout, prices, if it were to be continued to be bearish, it shouldn't surpass this 1.0635 level, at least in the short term. So I'll be using 1.0635 key short-term pivotal resistance, looking for at least a retest at 1.0560 for today, which is the 20-day moving average. So if we start to see a further break below this 1.0560, potentially we could start to see the start of another bearish impulsive down move, a much more substantial one, to retest 1.0490 followed by 1.0450. Okay, but however, a breakout above 1.0635, then another round of choppy movement on the upside to retest the 50-day moving average again at 1.0685. Okay, so that's for the euro dollar. So on the sterling dollar, very clearly as well, the bullish bias condition we have for yesterday invalidated, and most importantly, where it actually reintegrate, the euro dollar actually reintegrate back below the former descending resistance that was taken out on Monday. Okay, from this descending resistance that was taken out on Monday. Okay, reintegrate back into this gray line here. So indicate to us that Monday's move was a failure bullish breakout. So by right, in order for the short-term bearish momentum to resume, it shouldn't break above this key inflection level. Okay, so 122.20 key short-term pivotal resistance for today, flip to a bearish bias condition, looking for at least a retest at last Thursday and last Friday swing low area at 121.10. But however, if we start to see an hourly close above 122.20, then potentially we will start to see a squeeze up again to test the 11 and October and 12 October minus swing high at 123.30. Okay, so that's for the sterling dollar. So very quickly, let's go to the dollar yen. So dollar yen, right, is still no change on the dollar yen situation. Okay, where is my dollar yen? Oops, I think it's not out. Okay, give me a minute. This use. Okay, I think I didn't get it out. Okay, 1 second. Let me call up the chart again. Okay, so dollar yen, right, still no change, still being congested within these two key levels of 150.30 and 149.40. So yesterday it actually came down, retest again, and start to bounce and trade sideways. So overall, right, we're still looking for a much of a sideways continuation at 150.30 slash 149.40 level within these two range over here. So for sure, potentially there's still risk of what I call potential intervention coming to play. And do not forget over here is that next week we also have the key BOJ monetary policy meeting as well. So I do not think market participants will be so aggressive to actually push out of these two range at this point in time, unless there are potential intervention as instructed by MOF ahead of that BOJ meeting next week. Okay. Uh, what's next? Okay. So what we cover much of the FX market. Okay, let's now look at the Aussie dollar. So Aussie dollar, this is what our target that we have yesterday, or resistance 63.95. We will have a bullish bias yesterday, hit that level, shape a hourly doji. Then after that, it starts to actually inch much down lower, a bit of a bullish exhaustion in the short term, given the fact that the hourly RSI also inching down from the overbought level. So I do not want to use 63.95 as a key short term pivotal resistance, which is also the 50-day moving average. I'll use slightly higher at 64.30, which is the minor swing high area of 10th of October and 12th of October. So the entire Aussie dollar is still trading inside a sideways range in place since we call it this 4 weeks ago. Kind of trading a sideways range since 4 weeks ago. So I'll be using 64.30 as a key short-term pivotal resistance for today, looking for a pushback down to the lower boundary of a range in first step 63.50 followed by 63.20. So flipping to a bearish bias within a sideways range configuration. So however, if we start to see a breakout above 64.30 with hourly close above it, then potentially it could take us up to the top of that range at 65.10. Okay, so that's for the Aussie dollar. So now key commodities market, let's take a look at WTI crude. So WTI crude oil prices yesterday tumbled due to a weaker external demand environment coming out from Eurozone and UK. So right now, it actually now break below our key short-term pivotal support level that we have yesterday for us to maintain that bullish bias. So with that, that bullish bias scenario has been invalidated. So right now it's coming very close towards the level at 83.20 that was tested on on 12th October and on 12th October. So this level is where it actually coincide with the first negative news flow out from the Israel and Hamas conflict. Okay, so RSI appears to be positive right now because it tending to actually wanting to actually exit out from the oversold region, indicating to us at least a potential short-term bounce, but there is no clear bullish divergence that is taking shape on the RSI. So this bounce itself may not be so substantial. So we will actually turn neutral sideways for today and see how the price action develop. 86.55, 83.20 will be my sideways range, upper limit, lower limit for today's session. All right, so unless we start to see a clear breakout, the hourly close above 86.55, then potentially we could start to see a further push up again towards 88.35 followed by 91. But however, if we start to see on the flip side a breakdown with an hourly close below 83.20, then this down move here will start to extend to retest the key 200-day moving average, also acting as a support level at 78.70, which confluence with the swing low area of 23rd of August and 24th of August. Okay, now very interestingly, let's look at gold. So for gold over here, the XAU/USD, still recall that yesterday we do have a bearish bias on gold. So for this gold over here is the price action right now managed to actually hit that downside trigger level at 96.20. Then thereafter it attempt to push up and now trying to actually trade sideways below this former ascending trend line support level, now turns into a pullback resistance. So what I could do over here is that, given the fact that it got to be, in order for it to be bearish, it got to come down pretty fast, because it really retest this line over here. If we start to reintegrate back above it, that means this is considered as a failure bearish breakdown. So instead of using 2006 as my key short-term pivotal resistance for today, I will much have a tighter level in terms of a better risk management perspective. Okay, let me remove this. Okay, so I will use this area here. Okay, so this level, which is at 1982, 1982 as my key short-term pivotal resistance level. A breakdown below hourly close below 1963 potentially could actually reinforce this corrective slide to retest the 200-day moving average, now acting as a support zone at 1932/1920 level. So that's for the spot gold XAU/USD. But nevertheless, a breakout above 1982, then potentially we could see a start of what I call a renew impulsive, potentially impulsive up move to test 2006, then followed by 2028/2037 on the spot gold XAU/USD. So yep, we just come to the 30-minute mark. So that's the key highlights that I have for today in today's daily dose of market insights. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.